Time to pick up shares of Airbnb. Since the pandemic, the stock has really struggled with their profitability metrics. And because of this, the stock is near its IPO level. And it has to make you wonder, is Airbnb undervalued? Will it be a worthy addition to our portfolio? Or should we be looking elsewhere? Keep watching to find out, as we'll be talking about that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. But with that being said, today we're going to take a look at Airbnb's Q1 2022 earnings results. We'll do a deep analysis into the financials. We'll take a look at the technical setups to see what exactly is going on here, and then we'll conclude with an evaluation of this business and their financial metrics, and we'll be able to tell exactly whether or not this is a worthy addition to our portfolios or not. And if you enjoyed the analysis and the value investing perspective, please like and consider subscribing for more of this content. All right, so just before we jump into our earnings highlights, let's quickly take a look at what the technical setups currently are with Airbnb stock. So if I unhide the drawings that I have on here, what do we see? We see that we have strong resistance up in this 200s level, and every time it gets up here, it gets rejected strongly right back down. And when it gets rejected, where does it go? We also have our, let's say, anything under 150. This is where the price is supported and held up, and as you can see, it hasn't gone below there. Every time it does, it gets rejected, price pushes much higher. And the last time we did their Q4 analysis, we marked in here this 176 price line as it's held as strong resistance or support whenever it's above or below that line respectively. And as you can see, this held true as well for this most recent quarter. So it got rejected off this 176 level, came back down into our buy zone. This is technically the buy zone. And if you're a trader, this is a great opportunity to buy because it's most likely going to proceed higher and probably target this 176, if not even this 200s level. We'll get into exactly what Wall Street was thinking about these earnings results in just a second, but things are looking really interesting right now from a value investing point of view. All right, so jumping into Airbnb's Q1 2022 earnings highlights, we have revenue of 1.51 billion. This is actually up over 70% year over year, and it was a beat by 60 million. Earnings per share came in at a 3-cent loss, but this actually beat by 27 cents. And when we actually look at this from a net perspective, this resulted in a net loss of about $19 million. However, if we looked at the same period from 1 year ago and for Q1, they actually had a $1.2 billion loss at that time. So they've made, essentially, in my eyes, they've made $1.2 billion on their earnings since that last year, which is very strong numbers. We also see that their Q1 nights and experiences booked, these resulted in a 60% increase year over year. They also surpassed pre-pandemic levels, which means they're now at new highs, and this is the first time ever they've reached or exceeded 100 million, which is another great milestone. And then we have Q1 gross booking value, which they refer to as GBV, reaching 17.2 billion, another increase of 67% year over year. So they've had some great numbers in their highlights section here. And this has to make you wonder why the stock is still at lows when they're exceeding and growing by 60 to 70% on a bunch of their different metrics. And we'll get into that in just a second once we look at the financials. But just before that, they also mentioned their outlook for Q2 is that they're expecting 2 billion around approximately in revenue, and that's about 500 more million than what they had currently. All right, so let's jump into their financials here, and we're going to start with the statement of operations here. We're going to start with their revenues. Right, so we can see in 2021 revenues of 800, let's say 900 million. They had 1.5 billion in revenues, which we just saw at the last slide there. Next, we have their cost of revenues. Let's see how their costs are measuring out on a year-over-year basis. And typically what you can see from newer businesses such as Airbnb, that their costs are going to increase, their marketing, all these things, because they need to grow and you need to pay for your growth. So that's why we jump from 1.3 to 1.5 billion dollars in terms of their total costs and expenses. This results in their loss from operations, which was last year at around, let's say, 500 million versus this year at $5 million. So that's honestly, in my eyes, that's a check mark. That's a huge increase. They're working towards their profitability, and especially if they can grow, which they're hinting towards for their 2020 Q2 results. We're gonna see some profitable metrics finally for Airbnb, which is a plus for potential investors. All right, so we have interest income, yada yada. Not really important. And we get to the loss before income taxes. Last year, 1.1 billion. This year, again, $8 million of a loss. I mean, from a value investing point of view, this is exactly what you want to see from a potential investment. I'd still like to see them get to, profitability, of course, but this is a great step in the right direction. Results in a net loss of $18 million. All right, and moving on to the balance sheet here. Really, what I want to pull from their balance sheet here is I just want to see that their debt is serviceable and that their cash position is growing. So right away, what do we see? Cash is growing slightly. The next thing that catches my eye here is their funds receivable and amounts held on behalf of customers here. This increased by about $3 billion, and it's really the increase of $3 billion from their current assets from 1 year ago, Q1 2021. Not much else to go off from there. Now, the next thing I want to see is their debt. And right away, the first thing that catches my eyes is I look at their total current liabilities. This also increased actually year over year by about $3 billion. And that's the direct result of those funds payable to customers, which increased $3 billion. So if we look at that versus the asset side, yeah, it's pretty much, we can just write that off. It's relatively flat year over year. Now, in terms of their debt, this remained flat as well year over year. So if we look at this $2 billion in debt, compared that to the $6 billion in cash, yes, this is serviceable. Good business so far. Good business on the balance sheet. It's a check mark for me. Let's move on to the cash flow statement here and see what we can pull from here. So we drag down that net loss figure of 18 million, add back depreciation, amortization, some other expenses. I don't like to add back in stock-based comp, so I'm going to deduct about 200 million from our net cash provided by operating activities down here, which is actually this $1.2 billion figure. Let's call it 1 billion to make it even. So this is the cash that they've generated for the first quarter of 2022. Now, what do they do with that cash, which is very important when it comes to a value investing framework, is how do they reward the shareholders with the cash that they actually produce on a year over year or even quarter over quarter basis, right? So let's see exactly what they do. Nothing much to be seen here in the investing activities. So when we get to the cash flow from financing activities, we actually see they're relatively flat as well. So they're not doing much with the cash that they've generated for this first quarter, which is both a risk and a reward, I would say, at this point, because they are a new and growing business. You would like to see them rewarding shareholders typically, but also at the same time, as long as they can put that money to good use, they'll be rewarding shareholders in higher stock prices in the future. So yeah, it's a risk and a reward. What are they really doing with the cash flows? We don't really know just yet. We can see that they were taking on some debt, paying down some debt last year, but this year, yeah, we have a bunch of zeros. So they have some cash that they are adding to their balance sheet at this point. All right, so let's jump into our intrinsic value calculator here for Airbnb. I've went ahead and I've put in about $4.5 billion worth of free cash flows into the calculator, assuming that they can keep up their current growth rates for their free cash flows. And for the year, I'm expecting, let's say around 4.5 to $5 billion in free cash flows with a 10% expected return. They don't pay a dividend. If they were to grow at, let's say, 15% for the first 5 years and then 12% for the subsequent 5 years on a 20 PE, we can expect their intrinsic value calculation to get up to $120 billion. Currently, Airbnb is sitting at around $100 billion worth in their market cap. So that's a good 20% upside from these current levels. So that's solid from an expected point of view. Now that does mean that they are going to have to achieve profitability. They are going to have to achieve, around $4 to $5 billion in free cash flows year over year. But that is the math here. And then if we look at their exuberant case, let's say they can grow at like 20% for the first 5 years, and then 13% for the 5 years after that on a 25 PE, yeah, we can almost double in stock price. So yeah, very interesting from Airbnb at this current point of view. Of course, we have to look at the worst case as well. 7% growth, then 5% on a 15 PE. Yeah, we're looking at, the stock halving at the same time. So yeah, risk and reward, that's what it really comes down to with Airbnb. The growth is somewhat priced in. And if we go back to our stock chart here, I mean, we can see we're pretty much at these lows here. And actually, now that we're after hours, the stock has already rebounded to 153 from 142 just earlier today. So yeah, we can see that some people on Wall Street are enjoying what they've seen from Airbnb's earnings results. So it really depends on you at this point. Is this a great time to buy? I mean, we are at lows essentially for this stock. So I mean, it's cheap. It's probably as cheap as it'll get for a while, especially if they can continue with this growth. So yeah, that's what it comes down to. That's the analysis on Airbnb's Q1 2022 results. Things are starting to look better for Airbnb, and that's what we're going to have to see in the future. So if you made it this far into the video, Thank you for watching, and I'll see you on the next one.